Hello everyone, it's time for this week's market analysis. On this channel, we break down trading strategies and insights in a way that's easy to understand, all through chart analysis based on Dow theory. If you want to dive deeper into the methods we use, there's a link to an explanatory video in the description. Be sure to check it out. Let's get as good at technical analysis as a raccoon is at using its paws, crafty and quick. If you found this video helpful, please give it a thumbs up and subscribe to the channel. Now let's jump into this week's market. Let's start by looking at the USDJPY chart. First, let's review this week's price action. Here's the weekly chart. This week, the market formed a bullish candle with a long lower wick. After a series of bearish signals, including an upper wick suggesting potential downside, this week's bullish candle shows that buyers are still in the game. The market seems to be building up energy through horizontal consolidation, which could lead to a strong breakout. Next week, it will be important to watch whether the pair continues to test the weekly resistance level. Now let's move on to the 1-hour chart. The yellow vertical line marks the start of this week. Last Friday, the 4-hour chart had already turned bullish, while the daily chart remained in a downtrend. At the start of the week, the market dropped, but failed to break below the 4-hour swing low. After that, it reversed upward, tested resistance again, and surged higher following the NFP release. This is a clear sign of a market caught between strong buying and selling pressure. In such conditions, it is generally best to stay on the sidelines. When the daily and 4-hour trends are mixed like this, we often see range-bound movement. My initial scenario last week was to wait for a break below the 4-hour swing low, which would align the daily and 4-hour trends in the same bearish direction, making it easier to enter short positions. However, since that break didn't happen, this bearish scenario will likely be carried forward. Let's now go back to the weekly chart for a broader perspective. This purple line marks the key swing low. The market has bounced off this level, and since the body of the candle did not close below it, the weekly uptrend remains intact according to Dow theory. That said, the deep retracement and the failure to make new highs suggest that selling pressure is increasing. Overall, the market lacks clear direction. While the pair has bounced from the weekly resistance, the previous upper wick remains a potential pivot for renewed downside pressure. The pair is currently trading within a range between this resistance and support. If the market breaks above the previous wick, it would likely need to form a strong, bullish candle to establish new weekly momentum. At this point, I expect the market to retest the weekly resistance level. If it instead drops from here, it would be the 4th touch of this resistance level, so a potential breakout on the downside should also be on our radar. In terms of weekly scenarios, I'm watching for either a 3-wave decline or a rejection from resistance. If the 3-wave pattern plays out, this next support line will be a key level to watch. It aligns with an N-wave target and has acted as support in the past. Now let's look at the daily chart. The downtrend is still intact here. The key swing high remains at this level, and despite recent gains, the market has failed to break above it, confirming the ongoing downtrend. I'm also watching a potential head and shoulders pattern here. If the market breaks above the neckline in the previous wick, it would invalidate this pattern and make short entries more difficult. For now, the key is whether the market can break below the neckline and continue the downtrend. Next, the 4-hour chart. Following last week's gains, the market broke above the 4-hour swing high, turning this time frame bullish. This swing low is now key support, and it held throughout this week. This level aligns with the neckline of the head and shoulders pattern I mentioned, showing it is a key area of interest. Last week, if the market had broken below this level, I would have shifted more firmly to a bearish outlook. However, instead of a break, the market formed a double bottom and reversed higher. Now let's look at the 1-hour chart. The current trend is bullish here. This is the key swing low. The strong NFP rally flipped the trend to the upside, making short entries more difficult for now. Since the daily chart remains in a downtrend, I will wait to see if a fresh downward impulse develops, which would require a trend reversal on the 1-hour chart first. In summary, the weekly chart lacks clear direction, the daily chart is bearish, and both the 4-hour and 1-hour charts are currently bullish. Until the 4-hour chart reverses back to bearish, it makes sense to approach the market from both long and short perspectives, depending on how price action unfolds. Now let's go over the possible trade scenarios, starting with the bearish side. Given the ongoing daily downtrend, I view the current range as a potential correction before another leg down. The first bearish scenario would be a break below the 4-hour swing low, aligning the daily and 4-hour trends to the downside. If that happens, I would look for short entries on a pullback. For this to play out, the head and shoulders pattern must remain valid, with the market failing to break above the neckline in the previous wick. In the second scenario, if the head and shoulders is invalidated, the market could rally toward this level. In this case, the new 4-hour swing low would be here, and I would wait for a fresh bearish reversal on the 4-hour chart before considering short entries again. Simply put, if the head and shoulders is invalidated and the 4-hour chart remains bullish, shorting will be difficult. Now for the bullish scenario. There is also the possibility that this recent rally marks the start of a new bullish phase. However, with the daily chart still in a downtrend and the market not currently supported by a strong weekly level, buying here carries significant risk. If the market continues to rise, I prefer to wait and watch rather than chase the move. For a sustainable rally, we would need to see strong upward momentum in the near term. If the market remains range-bound, it suggests weak buying interest, which increases the risk of a downside break. If the pair does rally strongly, I'm watching this N-wave target as a potential area of interest for short setups. This level also aligns with the daily swing high, making it a likely resistance zone. Next week, I'll be focused on whether the head and shoulders is invalidated and whether a fresh bearish wave can develop from there. Did you find that helpful? If you did, please give this video a thumbs up and subscribe to the channel. Next week, let's be as skillful with technical analysis as a raccoon is with its paws, and trade with the same caution a raccoon shows in the wild. I wish you all successful trades. Best of luck.